What a freaking amazing day Friday was. At some point we were up a whopping 70% in a single day and the stock finished with a hella strong 62% gain. Moreover, during the last 5 trading days, Gratomic returned a whopping 118% return, earning Gratomic shareholders, including me, thousands and thousands of dollars of returns. And if you hodled this stock, you strapped yourself to a freaking rocket bound for the moon. So now you have left the Earth's atmosphere. Good job and congrats for enduring this rollercoaster ride. It surely wasn't easy. Now that we've finally confirmed the Earth is in fact round and that we have reached outer space, a lot of you guys will be wondering, should I sell, should I buy, should I hold, or do something in between? Of course, I do have to give you the classic YouTuber disclaimer. I am no financial advisor, blah 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 blah. You know the drill. So I cannot give you direct advice. But what I can and will do is explain to you clearly and concisely what I'm going to do on the short, medium and long term with my Gratomic position. And I am going to give you my thoughts whether Gratomic is bound for the freaking moon or whether the share price will crash right back into the earth again. Also, I am going to tell you what I told my father, who wondered if he should buy a couple of shares after the recent uptrend. So enough to talk about, so let's get right into it with first, Moonbound. Are we meant for the moon, stars and beyond, or will Gratomic share price come crashing right back down again next week? Honestly, who the baguette knows? Moreover, who the baguette cares? This is my most recent price prediction for Gratomic, which gives me a $10 price target for Gratomic by 2026 and my personal buy target of around $1.10 Canadian today. I will not dive too deep into that valuation here, since I've already done that in this video. Go check it out, it is a good video. Anyways, what I'm trying to say here is the following. I am admitting that I have no idea where Gratomic share price will go on the short term. Even if someone put a baguette to my head, I would tell them honestly that it's literally a 50-50 coin toss what happens on the short term. To be fair, I would chicken out and I would take that 50-50 coin toss to at least try to save my life. But I digress. The point being, you and I shouldn't be focusing on the short term. What we should be focusing on is the long term. Where do you believe Gratomic will be by 2025 and especially beyond? Invest according to that long-term vision. According to that future valuation. Be reasonable. Admit that Gratomic is risky. Adjust for that risk in Gratomic's current valuation. And then, and only if you are a long-term big brain investor, then you will start to notice that the short-term noise doesn't even matter. Moreover, I would argue, as I have done in plenty of my older videos, that Gratomic is indeed bound for deep outer space. Like I said, a $10 plus price target by 2026. So in my opinion, Gratomic will go to the moon and far beyond. But again, on the short term, I don't know and I don't care. And I believe you shouldn't either. Now that we have talked about my long-term vision and my short-term vision, or really the lack thereof, I really want to tell you what I am doing. And well, to explain my future actions, we first gotta understand where I am currently at. Currently, Gratomic makes up 54% of my portfolio, completely thanks to the recent uptrend, since just 5 days ago it made up just 30% of that same portfolio. And recently I have been buying the dip, heavily. Starting at $1 Canadian down all the way to below 30 cents Canadian. Honestly, I wanna pat myself on the back for this dip buying. I'm not normally someone to brag, but I do think I did a good job here. And I want to outline why I did such a good job. And really, it all came down to my mentality. I constantly made sure I had enough funds to buy more stock if Gratomic dipped further. I even got a part-time job so I could continue buying the dip. So that is a secret lesson right here, people. Always make sure that you are able to buy the dip, especially on your highest conviction stocks. As a quick reference, this dip buying allowed my cost basis to drop all the way from $1.12 to now just being 80 cents Canadian. So that is where I am currently at. 35,000 shares of Cartomic at a cost basis of 80 cents Canadian after heavily buying that dip. And here is what I'm going to do over the next couple of months and especially the next couple of years. I promised myself that at least 20,000 of that 35,000 share position is meant for 2026 and beyond. Those shares are meant to be held for the entire ride. You can see them as my core position. Of course, if the story changes significantly for the worse, I will not hesitate to sell. However, if that doesn't happen, I will continue to hold those 20,000 shares for as long as the investment makes sense. I will not sell those shares on the short term. But all those shares I added during the dip buying, well, I'm willing to sell some of those shares on a nice uptrend. Firstly, I will start selling some shares around the 1.6 Canadian dollar mark, which would be a 100% return compared to my cost basis. I am planning to sell those shares to significantly de-risk my investment. If I sell a tiny amount of shares at a 100% return, my cost basis will drop significantly going forward. And that de-risks my investment in Cartomic. So roughly 15,000 shares are meant for selling during the coming uptrend. Of course, if the price remains low, I might not sell any, and if the price skyrockets, I might sell all. It's hard to tell exactly what I'll do, as it all depends on the market. But I do have to be smart about selling. I honestly do see Cartomic trading at $10 and beyond in the future, so I would be stupid to sell too early. Just like my dip buying, I will spread out my rip selling. I will try to ensure I always have shares to sell at better prices, just like I try to ensure I always had cash to buy at better prices. But you know, if Cartomic did another huge dip in the future, I might even be buying shares instead. The plan isn't set in stone, as no investment plan can be, and they shouldn't be. However, the main plan can be summarized like this. 35,000 shares total, of which 20,000 shares are meant for hodling for years, maybe even decades if Cartomic remains awesome. 15,000 shares are meant for strategic selling during the next couple of years to de-risk my position and maybe find some other cool opportunities. So that is what I'm going to do, explained as clearly and concisely as I possibly can at this date in time. Notice how I didn't really say I was planning on buying more. Well, that has to do with the answer I gave my dad. He asked whether he should buy now. Personally, I wouldn't really be buying heavily after such an insane uptrend. I would admit to myself that I should have used that opportunity beforehand, which to be fair, my dad and I both did, but I would also admit to myself that I am experiencing FOMO. FOMO stands for fear of missing out. Now that is a fear of missing a future uptrend, which I am sure a lot of you guys will be experiencing, and that is fine. Even I am experiencing a bit of FOMO during this uptrend. But the thing I tell myself during those moments is this: the goal is to buy low and sell high. It sounds easy, doesn't it? Just buy low and just sell high. It is almost never an obvious thing. Not when things are low, and especially not when things are high. To me, Cartomic is still severely undervalued compared to Cartomic's peers, but also compared to my future price predictions. So if I were experiencing heavy FOMO, I would grant myself the ability to buy a couple of shares next Monday. You do have to scratch that urge. And honestly, you are still buying Cartomic at an amazing price, in my opinion. But I would also be ensuring that I am able to buy shares if Cartomic starts trading down again. Honestly, I do not hope to see Cartomic do RP again. But the fact of the matter is, they might. Bet your dumb trunk that if the opportunity arises, I will be buying Cartomic shares at 20 cents a share and below. Even better, if Cartomic just yeets itself to the stars and beyond, I will just execute the plans explained earlier. The point of this entire video is I am okay with all the outcomes on the short term. I understand the long-term trajectory of Gratomic with quite a bit of certainty. That trajectory is to the right, but especially up. It literally cannot go tits up. And with that said, thank you so much for watching. I love you all. Peace.